Hey guys, how's it going? It's Brad here with MSS Capital, co-founder and head trader, and today I'd like to share with you the 5 things you need to have before you begin trading. Well, let's go with the first one, the most obvious one. You need to have capital that you can afford to lose and risk before you can begin trading. You don't want to be trading with money you take out from a credit card, a personal loan. You do not want to take money from your home equity. You don't want to take money from your mortgage payment that you need to use to pay your mortgage, your car payment. You don't want to take any of that money. You want to be trading with money that you don't necessarily need and you can afford to lose. Number 2, you need to have a trading business plan because trading is a business. So, what does a trading business plan look like? I'll show you right now. Alright, as you can see, here is a trading plan. What is your motivation for trading? Trading, you cannot just be motivated to trade for money. You will never make money in this business if you are trying to trade for money. Your why needs to be stronger than your ability to breathe. Because if you don't, you're not going to be motivated to trade. Because trading is one of the hardest ways to make easy money. Traders have to study for tens and hundreds of thousands of hours to become successful. You can't just pick up trading because it's relatively simple to open up a brokerage account. When you just type in your name, your address, social security number, ask a few questions, and then all of a sudden you're trading the financial markets with people that have spent 10, 15, 20 years of their life trying to trade, and you think that you can go against them and take their money just because you open up a brokerage account and you read something online. Okay, that's not how this works. You need to, you're motivated because you want your family to have a better life. You want your kids to not have to work, or you want your kids to not have to pay for college, or you want to, pay your parents' house off so that your parents can retire and stop struggling. Whatever it is, you need to have a very strong motivation to continue so that when trading gets hard, you can push through those hard times to get to the greener pastures that trading does allow people to do when they learn how to trade the correct way. So, the next thing is you need to set goals. Your short-term goal: open up a brokerage account. Learn how to use the platform. Learn how to open up a trade. Learn how to close a trade. Learn how to cancel all orders. Learn how to set up a bracket. Midterm goals might be, short term like 1 to 3 months, maybe 6 months at the most. Midterm is 6 months to a year, year and a half. Long term, you're talking 5 to 10 years from now. What markets will you trade? Are you just going to trade stocks? Are you just going to trade options? Or are you just going to trade futures like we do here at MSS Capital? Or are you going to trade cryptocurrencies? How much capital will you trade with? How much money can you afford to lose? To start off with, if that's $1,000, $500, $200, $100,000, $1 million. What is your risk to reward ratio? So, everybody talks about risk to reward ratios. Well, why does this matter? This matters because I will show you right here on this screen. So if you're risking $50 to make $1, you got to be 98% accurate. If you want to risk $10 for $1, you need to be 91% accurate. But you come down to here where for every dollar you risk, you are trying to earn $2, you're only at 33%. That's less than half. And if you're a 3-to-1, you're only got to be right a quarter of the time. So that's why you want to go and figure out a good risk to reward ratio. And then what that'll do is if you're a 3-to-1, then you'll be able to go to your stock or whatever you're trading, figure out how much shares you need to be able to trade with the amount of money you have to get that 3-to-1 ratio. So if you're risking $1 and you want to make $3, how much does that stock have to move up? If it has to move up 5 cents, how often does that stock move up 5 cents, 10 cents, 15 cents? Then that'll tell you if that's a stock you can trade that's based on your risk to reward ratio. How many trades will you take per day? If you are under the $25,000, you are only probably allowed to day trade 3 times per week. So that's an issue. But as far as if you're trading futures and other markets like cryptocurrency and stuff, there is not a pattern day trader rule. You can trade whenever. Typically, there's going to be 2 to 3 opportunities in each market that you trade. So I'd suggest on trying to find the best 3 to 5 setups per day and only do 3 to 5 trades. How will you review your trades and performance? This is done with a trading journal. If you do not have a trading journal, this is going to be step number 3 of the 5 steps. You need to have a trading journal. What does a trading journal allow you to do? It allows you to enter information and the current state of mind that you're in. Fill out this form. Tells you where you got in, why you got in, what you were looking at, so that later on you can review your trades at the end of the day to be able to go through and say, okay, well, was I just pissed off because my girlfriend broke up with me and I was trying to get back at her and show her that I can make all this money trading? Well, that's probably not the best way to be trading. Or you can say, look, I was in a relaxed, calm state of mind. This is what I saw. You can go review that, and then you will see how the market moves. You're just getting another look at the market, which is helping you get a better understanding of the market you're trading. So you can take it and review your bad trades, because sometimes your losing trades are the best trades because you can learn from them, because you need to realize as well that every single trade, even though it's a bad trade, you might make money. And that is the problem with new traders. They get into these bad habits. They get into these bad tendencies. They say, oh no, my risk to reward was 3-to-1. Well, I'm down $1, but I see it turning around. I see it turning around. And then they hold on to it until it gets down to $2. And they're like, okay, I'll just hold it till it gets to $3. And then it'll be 1-to-1. Okay. When they hold it, and then the stock goes right back up and starts a reversal back in their favor, and then they get out. And then that creates a bad tendency. And you'll be able to see that in your trading plan, in your trading journal that you write down. And then you can be like, okay, I need to stop this. You need to look at stuff and figure it out. What is my time commitment? Do you have 1 hour to commit? I'm not going to go through this whole thing, but here's just a few things. Extra criteria, enter. Daily loss limit. How much are you going to afford to lose? That's typically going to be 1 to 2%. Anything more than 2%, you better have a lot of extra capital behind you to fill in when you lose that amount, because it will go very quickly if you're not paying attention. You can also set your daily loss limit with your broker, so as soon as you get to that daily loss limit, your account automatically auto-liquidates your positions so that you do not lose any more money than your daily loss. Your weekly loss limit is usually going to be typically 2 to 3%. You do not want to lose any more than 3, maybe 4 at the tops percent a week. And then monthly loss, I wouldn't lose more than 8 to 10% in a month. So then there's some other questions. Now let's go ahead and show you a trading journal, because trading journal is the next step. So you'll write the date, the news event, what markets you're watching, why, your entry area of interest in the above markets, your trade setup you're looking for, how you feel, are you relaxed, clear mindset? If not, go ahead, take a walk. Entry price, at what price was it taken and why, reflection while in trade. You want to look at the reflection in the trade, what your entry price was, why you exited. All this stuff will help when you're reviewing. It'll put you back in that state of mind. Then once you start writing down your notes and rereading them, you can draw it back in your memory from when you were in that position and you're looking at it at a later date and time. Typically, you want to review your trades every single night after the market closes or you're done trading. Review your trades so you can take what you learned from today and learn either losses or wins. You can go ahead and review those, take notes, figure out where you need to improve at, because every single day you need to be improving or else you're never going to make it. Then you need to also do a weekly review on Sunday or Saturday. Take some time and review your trades for the whole week. Maybe you might see the same setup coming here and there on the longer picture, but you didn't see it because you were so focused on that current trade or that current market at which it was, and you weren't able to take the step back, because as we all know, we never get smarter when we enter a trade. We only get dumber. Okay? You need to figure out how to take your current ratio, which is 90% luck and 10% skill. If you just do this one little thing, all these two things, if you review your trading plan and make a well-executed trading plan and review it every single day before you trade, and you also look over and create a trading journal and review it every day after you're done trading, every week, you will start to begin to take that 90% of luck and start sending some of it over to the other side, which is skill. So you'll start to increase your skills and decrease your luck. Because we are not gambling, guys, here. This is a business. This should be treated like a business. This market trades millions and billions of dollars a day between people, and you want to be on the winning side of that. Because unfortunately, there is, what everybody's heard, there is 90% of traders lose money. They lose money because they keep the luck percentage high and their skill percentage low. We all start out with 90% luck, 10% skill for the majority. And we need to start shifting more of our shares from that 90 and decreasing them and get it down to like 10% luck or 15% luck and 85 to 90% skill. And then on top of that, the last step, you need to go through and figure out and start reading trading books. New Trader, Rich Trader is a wonderful option. I will put a link in below for a bunch of books that you guys should go over. You need to read books, read from fellow traders, learn from people who have had success. I'm not just talking about read from some guy on Discord or whatever. Get a book and read it from one of these wonderful investors or traders on how they became successful in the trading. And then a pro tip for today is you need to go through and you need to not just trade whenever you feel like it or your gut instinct. You need to have a specific strategy that you trade, and that is all you trade, because every single time you trade that strategy and don't deviate from it, you build a baseline and you build consistency and you build trust in your system. If you're taking trades and you're not understanding why you're taking the trades, and you're just taking the trades because you felt like it, then you're not going to be able to have any data to go through and look at. You should really take your strategy and back test your strategy against historical data to find out how successful it is. And if you can't do that because you don't have the skills or knowledge, that's totally fine and acceptable. But you need to take your current trading strategy that you're trading right now or that you want to trade, and you need to make 100 trades specifically just trading that strategy, nothing else. stick to that strategy. Whether they're 100 losers, 100 winners, you're starting to lose, 2 or 3 in a row, it doesn't matter. You need to stick to that strategy, because in every single trading strategy, you're never 100% right. There's nobody that has 100%, 90%, 80% of a trading strategy. If they do, and they tell you that, you need to run very fast the other way, because there's something very wrong with their strategy. Most strategies are 40 to 65% accurate, and so there will be drawdown periods in that, where drawdown is typically when your strategy shows but you're losing money, but you're still sticking with your strategy because you know it works over the long term, guys. There are many profitable and well-profitable traders that have a 3-to-1 risk and have a 40%. Remember back in the video a little bit earlier ago when we showed you the risk to reward ratio chart? If you were a 3-to-1, you only had to be right 33% of the time. So if you're right and your strategy is 40 to 60%, that is wonderful, guys. That is great. So you need to stick to your trading strategy and stick to that information and not deviate from it, and that will be wonderful to your trading starting career. Well, please be sure to like and comment on this video. Also subscribe if you have not, so that you don't miss any of this awesome free educational trading content. And like I said, I will post below the link for some of the top 10 books that you need to get while trading, so that you can learn how to become a better trader, because it takes typically 10,000 hours in front of a screen to be able to start trading proficiently. And when you're starting to read books and everything else, you will start to see that, and that will cut down that time, and it'll help you get better in trading faster. We also do offer trading coaching as well as mentors coaching, one-on-one coaching, and we also do include, as you can see here, a wonderful trading indicator that tells you where to get in the market, where to get out of the market, and where to take profit. That's it for today, guys. See you in the next one.